The biggest single mistake I see homebuyers make is trying to shop for homes without first being pre-qualified for a home loan. In fact, that's usually one of the first questions any realtor worth their salt is going to ask. Are you pre-approved with a lender? If you're just starting the home buying process, chances are good that you aren't yet. Today, I'm breaking down my top 5 tips to getting pre-approved for a mortgage loan that best fits your needs. I'm Joe Nelson of Nelson Home Group, Google's highest rated real estate team in Kansas City. I'm also a licensed mortgage loan originator with Nexa Mortgage. I have the advantage of having seen this process as a home buyer many times, and a real estate agent, and a loan originator. And today I'm peeling back the curtain. Stick around until the end because I'm going to share the biggest pitfall I see home buyers fall into when getting pre-qualified so that you can avoid it. Okay, so you want to buy a house and you know you'll need a mortgage, but you don't know where to start. First things first, save yourself a lot of time and a lot of headache by collecting most of your documents up front. Usually at a minimum, your lender will need your bank statements going back 60 days, and they'll need the actual PDF statements, not just a print off of your bank's online portal. You'll also need your pay stubs going back for the last 30 days, your 2 previous W-2s, and the last pay stub of each of the 2 previous years. This will show the lender your total yearly pay breakdown so they can calculate overtime and bonuses. If you're self-employed or a 1099 contractor, the lender will also need 2 years of tax return documents as well. And you'll need these for each person on the loan. This can be a lot to track down and it's going to take some time, so it's not a bad idea to have it available when starting the application process. Start early, double check that you have everything, and get it to the lender as quickly as possible. It's very likely they'll need more. This will allow your lender to get you the best deal they can with the most accurate information and prevent any changes to your terms when unknown information comes up later. Next, when you want to buy a house and you need a mortgage, you need to make sure you start as early as possible to shop lenders and get pre-qualified. You don't want to wait until your lease is 30 days from expiring. It's too late. Give yourself time to not only get all of those documents together and to your lender, but check in with other lenders to find the right fit for you. You also want to give your lender time to run through as much of the process as possible. With enough time and the right information, your lender could finish the underwriting process for you, contingent on approving the home itself once you're under contract. And that is a huge advantage you have when negotiating with sellers in multiple offer situations. This added time helps prove you as a solid buyer whose offer is unlikely to fall through. So you're trying to buy a house, but your credit score is too low. What do? Well, tip number 2, you want to make sure you have a contingency plan if during your pre-qualification process, you find out your score isn't what you thought it was. Now, this bit of information doesn't have to be a surprise. With online scoring programs, you can check your credit scores to get a ballpark idea of what's going on. Just remember, these programs like Credit Karma are only educated estimates as to what your score is. The credit bureau scoring models are copyrighted and no one has the exact formula. So when you get those emails from different companies about your credit score going up or down, they're not exact. That said, your lender is going to get a full picture when you apply and provide them with the documents I mentioned earlier. If your credit isn't where it needs to be, ask your lender for suggestions on how to get it up. They should be able to give you some basic tips to help you qualify or even bolster your score for a slightly better deal. If your credit is significantly lower than necessary for your desired loan program, many lenders either have or work with credit rehab programs to increase your score quickly. If you've given them what they need and started at least 90 days in advance, you're going to give yourself the best shot at mitigating your risks early. My next tip when trying to buy a home and get prepared for the pre-qualification process, save up as much money as you can before you apply. I call it the ramen noodle diet. It's always a good idea to putting a little money away for the future, but once you know for sure you want to make a move, put as much toward that fund as you possibly can. Ideally, you want to save for at least a 5% down payment. And here in Kansas City, you'll need roughly an additional 6 to $9,000 for closing costs. Of course, your closing costs can vary a ton by lender fees, rate costs, insurance, and taxes. We can sometimes get gifts from friends or family to help with the cash needed to close, and we may be able to negotiate the seller paying some of your closing costs. But in the current Kansas City housing market, it's very challenging to negotiate seller-paid closing costs. If you've saved as much as you can and you're still coming up short, don't lose hope. There are also 3.5% or even zero down loan programs and down payment assistance programs available depending on your unique financial circumstances. Work on that pre-approval early and you'll be able to see what assistance you qualify for. Finally, remember that when you're trying to buy a home and working on getting pre-qualified, your qualification and interest rates aren't set in stone based on rigid black and white conditions. Your debt-to-income ratio will come into play. The financial reserves you have in the bank or retirement accounts and investment funds can also be factored in. Even your job history will make a difference. It doesn't all just boil down to your credit score. Getting qualified for a loan is like putting together a puzzle. Your credit score is just one piece of that puzzle. Whatever you do, make sure you don't make this mistake. I've seen too many potential buyers make changes to their credit after they are pre-qualified and either blow up their purchase or make it much more difficult on themselves. You want to avoid doing anything to affect your credit, even if you think what you are doing will only help your score. Once you're pre-qualified, do not pay things off. Open new lines of credit, make large purchases, or transfer large amounts of money from one account to another without talking to your lender first. Always ask your lender before making any significant financial decisions to ensure the terms around your approval remain the same. This even includes going out to purchase new furniture or a beautiful new refrigerator for that home right before you close. You might be fine, just check first, please. There you have it. My top 5 tips to getting pre-qualified. If you would like to see if or what you can get pre-qualified for, including our zero down and down payment assistance programs, we've included a link to our loan application in the description below. Of course, if this creates more questions for you and you'd like to chat before applying, please shoot me a text, give me a call, or fire off an email. My contact information is on the screen and in the description below. If you found this video helpful, please do me a favor and hit that like button and subscribe to our channel. This helps us reach more people like you. We release a new video every Friday. In fact, we've got one coming soon about the advantages of having a real estate agent who is also a lender, so don't miss it. As always, if you're looking to make a move in or around Kansas City, make sure to text or call. Let my team be your real estate and mortgage experts of choice. Until next time.